Hello guys, my name is Behroz and welcome to my channel where I talk about how you can achieve financial and career success. Now in this video, I will be sharing with you 3 viable investment strategies. And note, the third one is my favorite and it's the one that I use. So stay tuned till the end of this video to know about all these 3 viable strategies. Number 1 is that you are more intelligent than others. Frankly, I'm not that guy. I'm good at what I do. I have a 9 to 5 job. I enjoy YouTubing. I enjoy coaching, teaching people on personal finance and career success. These are the things I enjoy. But when it comes to investment and being really intelligent about investments, that's not me. Now, I do coach people about personal finance. So that's a very strange thing to say. The piece here is that I need to know more than an average person to really beat the market, to really supersede the returns in the market. Now, that is possible for people like Warren Buffett, Ray Dalio, who are into this game. This is their day job. They do this day in, day out. For me, it's not my day job. I have a different 9 to 5 job. I'm a corporate finance individual and finance executive. And then I have my passions like working out, passions like YouTubing, coaching on personal finance, on career. I have other hobbies. I play music. I have my family. So I don't have time in order to train myself to really find that one particular company that will become the next Google or the next Amazon or the next Uber. I don't have the time, I don't have the capacity, and maybe I even don't have the capability to the extent where these guys like Warren Buffett and Ray Dalio have, where they study the annual reports of each and every company they're interested in or they're evaluating, and they just talk to their management. They talk about the strategies. They are the ones who are involved in crafting those strategies as well. They are sitting on the boards of these companies. Of course, when you are present in such circles, you eventually become intelligent about investing in those companies. For me, I don't have that access, and hence I don't consider myself intelligent versus an average investor. And that's why for me, this is not the viable investment strategy. It is a viable investment strategy for people like Warren Buffett and Ray Dalio, but I don't compare myself versus them. What I need to do is, on average basis, I just need to at least deliver the market average returns or slightly supersede or exceed it. And for me, this is a lot of work. So if I look for intelligence in investment, it will be a lot of work. And it has to be like my day job. If it's my day job, I leave my day job and all I do is investing, read each and every word in the annual report, understand what the company has been doing, is doing, and will do in future, and then plot their future financials and see where they will land, and basis that make a guess. Yeah, fine. But as I said, I don't have that much interest. I don't have that much time. So this first investment strategy is off the table for me and probably off the table for you as well if you are watching this video. Now, second viable investment strategy is if you are luckier than others. I am not. I am an average individual. I found luck. I've been in instances where I've been more lucky. I've made some good bets in investments as well. I've made those high returns in those investments, but at the same time, I've also made bad bets and I've been unlucky. And if I see on the longer term, I average out. So the money I've made through luck averages out with the money that I've lost through luck as well. And at the end of the day, it was just more stressful because I was picking a single stock. Let's say I was picking a special stock, special company, investing in it, thinking about it, taking the stress of taking the risk. And then at times those risks work out and at times those risks did not work out. But on average, if I'm delivering the same return as market average, what's the point of taking so much stress? So I've concluded, while I'm lucky in some areas, I'm unlucky in other areas, and hence I average out again. So I am not luckier than any average individual out there, and I would assume it's the same for you if you are watching this video. Now this leads me to the third strategy, which is that if you are more patient than others. Now that is what I have. I have more patience than others. And if you have more patience than others, you will be able to succeed with your investments. And let me share with you my patient investment strategy. Number 1 is diversification. Instead of finding that one needle in the haystack, what I try to do is I just buy the haystack. Now, of course, I would not be able to deliver above average market returns. I understand that. But as I said, for that, you really have to be either intelligent or lucky. I don't consider myself to be falling in each of or either of those camps, and I'm in the patient camp, which is I go with diversification. So instead of picking that one stock, one company that I think will eventually deliver the returns, I just buy an index. And for me, my favorite index is S&P 500 index, because for S&P 500 index, all I need to believe in that the US market will continue to deliver on the trends that it has been delivering in past. If that is the case, that is all I need to know for me to have trust in S&P 500 index. So instead of picking one company or one particular company in S&P 500 or in the global economy, I just buy the haystack, which is S&P 500. I own the index, and the index has historically been growing in the range of 8 to 10%, which is good returns. Now, there are people who lose even when they are investing in index funds like this, is because they are also doing in and outs. And this is strategy number 2, which is the timing of the market versus time in the market. I don't try to time the market. I just try to spend time in the market. So I remain invested. What people do is when the stocks are falling, they panic, they sell. So they sell low, and when the stocks are rising, they think it's a good investment, so they buy. So they buy high. They sell low, they buy high. If you sell low, buy high, even if you're doing it with an index fund, which is diversified, you will still be losing money, because it is not about timing the market, it is about time in the market. So you have to stay invested in the market. There will be moments when you will be low, there will be moments when you will be high, but as long as the market is growing in the long run, which it has been growing around 8 to 10% historically in the long run. Yes, of course, there are years when it is below 8%, there are years when it's above 10%, but on average, it's 8 to 10%. You are sorted. So idea is always to have a long-term view. Don't go and invest for short-term. Don't go and time the market. So I keep a long-term horizon when I invest. There are times when as soon as I've invested, the market has gone down and it has kind of crushed me, but I've stayed invested, and then the market has picked up again. The market is volatile. It keeps going up and down. All you need to do is stay invested, and stay invested for the long. Number 3, which is my favorite, is daily cost averaging. I made a separate video where I explain how daily cost averaging will make you win investment no matter what. Even versus the person who can time the market, daily cost averaging will always get you to be the winner. It is proven by data, and you can see that data that is shown and that I present in that particular video. I will leave the link here and also in the description of this video. What you need to do is, and what I do is, I invest on daily basis or weekly basis a flat amount that I continue to invest regularly. There are moments when I buy the index at a low price, which is good, and then there are moments I buy the index at a high price, which is not that good. But since the market continues to go up, so even that the high and low, it doesn't matter, it averages out, and I continue to climb in the market because I am frequently buying. At times I'm buying low, at times I'm buying high. Now, one strategy that I certainly hold is when the market drops like 5 or 10%, I kind of increase the level of investments that I'm doing. So for instance, if I'm investing $100 every week and there is a particular day in the week where the market drops 5 to 10%, in that particular week, I won't be investing $100. Rather, I will pull forward my investments and invest, let's say, $300. And if the market goes down further, then I invest another $400, and so on and so forth. So I pull forward the investments, because when it's a bad time, when everyone is selling, that is your time, because you have cash, you have money with you, you're investing on daily basis. And for you, it's not much of a big hassle or a risk or not a strain, because there were moments when you bought high, there were moments when you bought low. So you are averaging it out good versus someone who just bought before the market crash. Now they are in a limbo because they have to sell, but you were buying regularly and you were buying in small amounts. So the market crash doesn't crushes you a lot. So when the market crashes, you are calm, you rather buy more. You pull forward your daily cost or weekly investments and invest in that particular time. And then when the market picks up, you benefit. So if you continue to maintain this strategy where you pull forward every time the market goes down by 5%, 10%, or more than 5%, you just pull forward your investments, you will come out better than the average market returns. So guys, my strategy is to remain patient, remain investing for the long term, diversify, and use daily cost averaging. In case you found this video valuable, I'm sure you'll find another video valuable where I talk about my financial freedom journey. You can check it out here. Other than that, there is another video where I talk about how to find best stock investments. I know it's slightly different from what I talked about in this video, but do check it out because I kind of share some nice tips in that video as well. Thank you.